The Reserve Bank is set to lift interest rates again tomorrow. Brace yourself, another 50 basis point, which would bring the cash rate to its highest level since December of 2014. Joining me now is our business reporter, Edward Boyd. It's been almost a decade since interest rates were at this level. It's hard to imagine, actually. This is all due to inflation in Australia, which seems to keep rising.
There are certain things that are coming down in price, Laura, like fruit and vegetables, and we know petrol has come down a little bit, at least unleaded fuel has. Diesels remain very high. But there are other costs across the economy that remain elevated. Wages are increasing, so employers need to pass those costs on to customers. And then there's transport costs as well. Moving goods around the country, bringing things into and out of Australia is still really expensive, and that's one of the main contributors to inflation. So Reserve Bank is going to be lifting the cash rate tomorrow by another 50 basis points. That'll bring it to 2.35%, highest level since December 2014. For an average $500,000 mortgage, that's about $144 extra per month from tomorrow. But if you take in rate hikes since May, it's more like another $614 on a $500,000 loan. We've got a chart we can show you that Commonwealth Bank put out this morning. And basically, this just shows the 3-month lag between when rates are increased, at least for Commonwealth Bank customers, and when they actually start paying more money. So on the 4th of May, the RBA increased the cash rate by 25 basis points. And according to CBA, it takes about 3 entire months, so until the 3rd of August, for those mortgage holders to actually start paying back higher minimum monthly repayments. So this lag is something that CBA's talked about this morning, and it's one of their reasonings as to why consumer spending in Australia is still so strong. Because people are only just starting to feel the pain now from those May rate hikes. So it's basically all going to start catching up to Australians with mortgages very soon, and businesses with loans as well.
That's a good point, right? Because the RBA has a very delicate balancing act here, because if you go too far, we start talking about the R word, recession. So how will the RBA now start taking into account this 3-month lag time when we're seeing 5 straight months of interest rate hikes?
Well, it's going to be a very delicate balancing act for the Reserve Bank, and we actually will get to hear from the Governor on Thursday, and hopefully we can put some questions to him around his view into where the economy's at and where Australians are in regards to their mortgages. A lot of banks have said Aussies at the moment are ahead on their repayments, but that's probably going to start coming to an end as all of these successive rate hikes start to add up and people actually do start seeing a lot less money in their bank accounts every month because they're putting it all onto their home loans. So this is a really fine balance that our Reserve Bank needs to find, and also all the other central banks around the world are dealing with this too.
Love these forward planners. Who are these people? I'd like to meet them, get some tips. Ed, Wednesday, the June quarter GDP figures will also be released. Consumer spending expected to underpin Australia's economic growth.
Well, this is it. So retail spending is still at record highs. Every month, retail spending keeps going up. So that is going to be the main contribution for Australia's GDP in the June quarter. So we're expecting 3.5% growth for the 12 months to the end of June and 1.1% growth over that 3-month period. So economic growth still keeping up reasonably well with where the economy's at the moment. But obviously, these are backwards-looking figures. We're now in the month of September, so it's almost 3 months past when that economic numbers were actually coming out. So we need to really be looking forward here and looking ahead to what economic growth is going to look like this year and next year. And hopefully we do avoid that recession that other countries seem to be falling into at the moment, Laura.
Yeah, we hope so. Ed, thanks so much. We'll check in soon.